ready to start the wrap up. We did had GDP for UK. I'm just going to start addressing the news first. It's not my time zone. There we go. Where is it? 6 o'clock. There we go. So as I expected, it was safe. Is anyone on pound dollar? Is anyone trading pound dollar at the moment? No? Okay, interesting, because that's the trade we took, I took, and I've explained it, all the reason. One thing I want to mention here is that, yes, I have a short position. That's good. I've just got my target hit on euro dollar. So I was looking at the 107. I got in at here, and I got in here as well. So those two positions, that was pretty good. So yeah, my target is at 107. So pretty much I'm still expecting it to rover around this area for the next maybe 15 days, because this is a short month. As you guys can see, we're gonna finish on the 29th, so there's only a week and a half to finish it. So we have until next Thursday. It's going to be a week, and then a half of the week, actually 2 weeks. We have 2 weeks, sorry. So 2 more weeks to finish it, and that would be it, right? So I guess it will be somewhere, doing some of those kinds of lines, going somewhere here and staying like this until, yeah, somewhere here. So maybe it can consolidate on this, because most of the targets of big players was at the 107. Okay, it was at the 107 level. So in my opinion, I guess that this would be the big thing here, right, on euro dollar. Now, situation changes when we go to to dollar yen and the pound dollar. And if we go to pound dollar, I still have my short position in. Let me open my MetaTrader just a second. Here. Okay. Where is it? Okay, there we go. So I still have my short position here on pound dollar. Oops, sorry, here. So it's still carrying, how long? Still carrying nearly 200 pips. So that's pretty much it for me on my side. Okay. Now, USD JPY is still a very good trade. Okay, especially if you look to long positions, and it's nearly on the all-time highs since 2021, if I'm not wrong. Is it 2021? 2022, sorry. So yeah, all-time highs of 2022. Actually, it was the same exactly price. I think it was 152 and then 152 as well in 2023, November 2023, because last year we had all of that confusion of the board, they will hike the interest rates, this and that. Well, they didn't. So, so it occasionated all of these moves. That was pretty much let's call it manipulated move. And then we had now the actual uptrend continuating the uptrend. Right, so let's count this as a big pullback. So as we had the up and down and up and then down, and then probably continuation to the upside. As I talked to you guys, I did had a friend looking at the 170. I'm looking at the moment at 152 first to see how we're going to go. But if we still have a momentum to actually cross those levels, 152, and retested and continuation uptrend, why not 170, right? But the big thing that is running around USD JPY at the moment is just the NIRP. Where is my pen? Just a second. Okay, so the big thing on USD JPY right now is sorry guys, I don't have the premium version. Is okay, USD JPY. Oopsie. It's pretty much been driven by an IRP as well as bonds. Well, Japanese government bonds, so GGB and the NIP. Well, not the exit of NIRP. Okay, I've explained it to you guys already. NIRP, Japanese government bonds, and the exit of NIRP. Yeah, this one, we don't need this one. It's pondering already. So this is pretty much what is driving USD JPY. Anything that goes, especially JPY, of course, but it reflects on the USD being a base, against JPY. So anything that relates to the negative interest rates policy, as well as people talking about Japanese government bonds, it will have impact on USD JPY, right? So if anything you heard on the media that talks about this, take a second and have a look on this, read it through, because it's very important, all right? At the moment, as I told you guys, we do have some big investors dumping money from Japanese government bonds. Let me see if I have this as a public information. GGB bonds. Is it? Maybe. Japanese rates and bonds, Japanese 10-year government bonds yield quote. That's not what I want. Yeah, it's going to be very hard to find it public, but I can try to take from Bloomberg and send to you guys over the Telegram soon. But if we look here, it's pretty much, I've mentioned about this already, but if we get 2024, that it is right here, right? That's the start of 2024. Since now, right, we have a month and a half. We've just started. We've just at 17.87% on Japanese government bonds. So imagine you as an investor getting paid 17% in a month and a half. It's like, whoa, right? And nothing can probably pay you. Nothing can probably pay you that much right now in the market. If well, you can trade for yourself, but that's a different story. But when you invest and you have like 100 million, you get 17% of 100 million. That's 17 million in a month and a half, right? So that definitely captures my attention. And the other thing that captures my attention is if we have Japanese 10-year going up, why does USD JPY is going up as well? Because we do have still on negative interest rates policy. So that's the point. That's the point I want to mention here. Also, we get exit from the NIRP, but it doesn't seem like it's going to happen until Q3, Q4 this year, because we just had Japanese gross domestic product today, and it was negative. Okay, so it doesn't look too good. We need much more better data to actually approach to the market and look at how can I say that, a more bullish view on Japanese yen. Okay, because at the moment, what just makes sense for me is short Japanese yen and long other currencies against stronger currencies like pound is one of them, but definitely US dollar, So if we have a look at GBP, JPY, oopsie, sorry, GBP, JPY, you know, it continues to go up and up and up. All right. Even I had a long position today on Euro JPY. Let me show it to you guys. Just a second. Grab it. I've just added a position, a long position here. Okay. So I do believe that we can continue up on Euro JPY. All right. Because Japanese yen is so weak at the point that I'm not betting on favor of it. Let's say like this. Well, the best point, of course, to buy would be on this pullback. You know, we had uptrend and then pullback and then continuation up. But I've just bought it today for no reason, to be honest. I just don't believe in Japanese yen. Okay. Well, the big move that if we look at here on yesterday. Okay, so if we look here, right, let me take this off. Okay. If we look here at euro dollar, right, on the 1 hour chart, we can see that we had a massive down move, right? That was this one here. This was fulfilled because of the US CPI, that came much higher than expected, right? This one came 2 base points above what the consensus was. This one came 1 base points above what the consensus was. Even though reducing the previous to lower numbers, it didn't impact. All right. The thing is that what I notice is it's that in this scenario right now of the market, majority of the data will be positive for the US dollar. All right, so I'm not making any models or assumptions on that. It's just a guess. All right, and what I've been, how can I say that? What I've been observing. All right, what I've been looking at, and okay, that does make sense. Actually, you know, there's so much weaker points for Europe. There's so much stronger points for for dollar. Therefore, a continuation of these strong moves on US dollar will continue. All right, will be present. Even if we look at the DXY, I've mentioned this already since beginning of the year. Like, okay, we're going to have a break above the 104 500. If you said 104 200, because that was the top, and then we consolidated again, and then we had another up move just today, just yesterday, because of the CPI. So, you know, I continue to be a bullish on the US dollar for the first quarter, and as I've been mentioning this since last year. Right. I've mentioned about the gold as well, reaching this level here. Well, guess what? We just reached it as well. All right. I saw so many analysts looking to buy gold and got caught on these not nice, not nice candle here, especially on gold, right? The whole concept here was pretty much simple. Of course, CPI fulfilled the movement, but all the tensions that are going around, it's not helping gold at this point. All right, and US dollar is the one that is paying the most at this moment. All right, so even, you know, as I just mentioned, this thing here just fulfilled the whole move of CPI of gold and any pairs that had US dollar. Even though if we go to the Aussie dollar, we did have the move down that I told I was expecting as well. Okay, let's have a look on New Zealand dollar. Senti just mentioned it. Yeah, you know, I thought it would be somewhere around here. It would come back somewhere around here, but it didn't. So that's pretty good as well. I just need to check what sort of targets may be looking at, because there is room to fall, but there is room to come up as well. And even though we have New Zealand dollar, right? Where's the pen? Even though we have, okay, so let's go like this. Okay, let me take this off. Let's go like this. So in one side we have R, B, and Z, and this other side we have the FMC. Okay, basically New Zealand dollar and US dollar. Okay, both of those, well, I could do different colors. That would be much better. Yeah, so both of those central banks, they are very, very restrictive on the interest rates. And as I've mentioned for you guys, the forex market right now, it is moving around interest rates. Okay, so for me, that's my opinion. FX in 2024 will be rates and government bonds, GBs. Okay, government bonds. So rates, Jesus, rates. Sorry. Yeah, I did wrote it. Actually, I was wrong, I guess. Anyways, sorry for this. Okay, rates and government bonds. Okay, and what are those two guys doing? The RBNZ and the FMC. I don't know if you guys know, but RBNZ, we had an analyst. Okay, let me bring this up. RBNZ, another hike. Okay, so that's one of the analysts at ANZ. And if we look at here, they do believe that RBNZ could hike. Okay, and New Zealand and US inflation is pretty highly correlated, should say. In fact, the New Zealand pricing intentions explaining US inflation better than it does on. So what can we expect for the inflation coming to the New Zealand? A higher inflation, because we just had a higher inflation on US. Therefore, we may have a higher inflation on New Zealand as well. Okay. And if we do have a high inflation, what she's basically mentioning is that the RBNZ could hike one more time. Okay. But as we all know, the Fed as well. Okay, so the RBNZ could hike one more time, and the Fed has postponed. I don't know how to write this. Sorry, postpone the cut. Okay, so we have two different scenarios here. We have one central bank that could hike one more time, and we have another central bank saying that, well, we would cut in March, but now we're not going to cut in March. So we're looking to more more data first, especially now that we have a higher CPI. This is the thing that I want to hear from Jerome Powell, what he will state. Probably he will say that because of festive years and this and that. Most probably he will say that. Write it down and tell me that, and tell me later. I know him. Anyways, and most probably what will happen is we're gonna have a different swap. All right, so we call this thing here. Let me grab another pen. We call these two here as a oopsie, as a interest rate different swap. Okay, so IR diff swap. Okay, pretty much what it will happen is, let's say we have a chart here. Okay, so we have time and value. So this is 5%, this is 3, this is 2, this is 0, and then this is the years or whatever. So right now we have the Fed right here. Okay, and we have the RBNZ somewhere around here. Okay, so we do have a difference, of course, a very big difference from the RBNZ and from the Fed, right? We do have these two, maybe 100 points or something, 1% or a little bit more of difference. But if we look, what the Fed is projected to do is, this is 20, let me put it here, 2025. So that's 25. So what probably they're predicting to do is they're going to start to reduce the rates on somewhere around this and that and then this, and then until rates here, right? If we do have a point that we have the RBNZ actually coming down, and then we have a high inflation, and this happens, and then continues to go down, maybe like this, even after it can finishes lower. But this is when the New Zealand dollar will be stronger. Well, that's not what I want. This is when the New Zealand dollar will be stronger than the US dollar, because investors will be looking to put money on US dollar right now, on New Zealand dollar right now, and not on US dollar. So this is pretty much the view I'm looking at for New Zealand dollar against US dollar, okay, against the greenback. What can go wrong? Well, what can go wrong is pretty much the Fed postpone even more to cut the first rates, because we may be looking at June, maybe June. We can have a look on this in a second. Let me just drink some water here. Okay, so we may be looking to the Fed FOMC to cut rates somewhere around July, June, July, half of the year, because most of the market is expecting that. I was pretty confident that they would cut in March. Okay, pretty confident that they would cut in March. But even if Jerome Powell haven't stated that they would cut in March, and I see these numbers of inflation from US just yesterday, I would be like, nah, definitely he won't cut in March anymore. So even him, he knew it, that inflation would come higher. Okay, otherwise he would have stated, yes, we will cut in March or something like that, right? He's not dumb. Remember, guys, he's not dumb. And remember, he does have the numbers first than everyone. He's making the numbers. So he knows the numbers before everyone. Okay, so that's pretty much my take for New Zealand dollar. Hopefully I could answer your question. Why it is low? Just because of this, market haven't decided yet. Okay, now let me clear these drawings. Actually, let me take a photo first. Okay. And let me show you something here. Let's see. Okay, you guys know this website that I'm just gonna pop up on the chat again so you can follow if you want. So now, 20th of March, only 10% of the market is expecting a cut. Only 10. All right, that's pretty much no one. But when we go to May, they change it again. All right, they changed it again. Remember, it was 40, it was nearly 60% here. Well, now it's not. Why? Because of the inflation. Okay, so this is pretty much what is happening. This is what I'm saying. It's now more towards June, July. If you look to June, few participants is expecting a cut, or a 50%. And then July, 29%. So, you know, it can happen on June now. So this is the only thing we have to always pay attention to the inflation data, unemployment data, NFP, you know, employment data, and so on. So just be careful, okay? Always keep an eye on these two. It's pretty helpful. It's not the holy grail, okay? It's not the holy grail. It's not 100, always 100%, but it does help a lot to get a foot behind and see, okay, you know, this is what the market is expecting. Go and do a search on what do you think as well, okay? So that's my take on New Zealand dollars, New Zealand dollar, okay? Just a very, very hard one to trade. No, the only thing I'm looking at euro dollar is to see how it will finish the month. Okay, because if you look like, let's say 30 minutes or something, let me take this off. We are coming back for pullback. That's no surprises, right? After a huge move down, we come back to a pullback. If you guys don't know how to use fib, one of our analysts at ACY, he did um, a video today talking about how to use the Fibonacci strategy. Okay, if you look here, this one. Okay, so I'm going to send the link on the chat here as well, so you guys can go and have a look. Pretty good video, all right? Very simple, nothing too fancy. Just how to, you know, put Fibonacci up and down and what's the 62 level, 50, 38. I think most of you know how to use already, but in case if you don't, that's the one to go for. And yeah, so if euro dollar retraces somewhere around those levels and come down, I may risk a long position. Maybe. I don't know. I know I sound very like, wow, what are you doing? Yeah, but it followed my thesis for the year. All right, I did got my first quarter target hit. And right now I'm interested to get into a long on euro dollar. That's my interest at the moment, right? But for this, I would like to see a move down first and see how we would go from there. Okay. And most important is if euro dollar continues to go down, that's good as well, because I know that most probably half of the year, we still have 4 months and a half until that. That's it's going to be very quick. I know it sounds like, wow, 4 months, that's going to take ages. Now we're already finishing second month of 2024, guys. So it goes quick, believe me. So in the next 4 months, maybe, you know, we continue to go a little bit down and then consolidate it a little bit, you know, because as I just mentioned, the big target for hit at 107, most probably a continuation to the uptrend that we were having. Those form, if we put like in a daily chart here, we can see, all right, that we are never on an uptrend, right? We're always on a big pullback. So where's the thing? There we go. So down, pullback, and then continuation, pullback, down, pullback, and then down, and then this would be a basically pullback. All right. If we go to the 4 hours, the best option for continuation would be going down. So therefore, there is a probability of this happen as well, somewhere around the levels of 106. Maybe it happens. It can happen, right? It's very quick to get there. So just pay attention on that. Pound dollar, I do believe on a continuation downtrend. Okay, just believe that even though euro is much more, well, pound is much more resilient than euro, is still very bad for pound. All right, it's not that good as well. Therefore, I'm just not looking too long pound at the moment. This is my personal strategy. All right, maybe you have other strategy. You can apply this strategy as you wish. What else I had? Gold, WTI. Yeah, WTI, as I've mentioned, it did went up. It hit at that area. Now coming back again. So most probably we're just going to be in this range for a while until we get off from the Red Sea tensions, as well as the Israel and Hamas war, and all of the things happening on the Middle East. Once we tranquilize, once we have more calm oceans there, then maybe WTI can come back to somewhere around 70. But until there, I guess there's a lot to happen. Okay, and it is correlated as well, linked. Right, there is a relation. That's what I want to say with the rates. Okay, so just pay attention on that as well. Pretty surprised about the TFM, right? The Dutch gas. It is on $24, right? So now I see reasons why would be good for Europe, and feels like it wants to continue to go down, right? Somewhere around these levels of $16, 16 euros, sorry. So how much it would be in dollars? Let me see. US dollar. That would cost 26 instead of 24. But anyways, so that's going to be 24. That's going to be 24 euros right now. Maybe 20, 10, maybe it can happen. And remember, I've shown you to you guys already what a big correlation that we have with the euro dollar. Okay. Well, we can't see much here, but I'm going to try my best to show you. If I go to, oh yeah, I can't go to that. Yeah, I can't show you. It's not going to be good. Anyways, so we do have a big correlation between the euro and the gas. I just want to put it in there where I can't move it. That's not cool. Oh, there we go. Maybe. No. Yeah. Nope. Sorry. Anyways, so we do have a correlation with euro because who holds most of the gas? All right, it's Russia, and then Russia sends to Germany, and Germany sends to the whole Europe. So therefore, it does have a big take on the gas sides of things. Okay, now if we go for what's the one I will look into? Where is it? Oh yeah, USD CHF. USD CHF. Okay, so who was on the trade on USD CHF? Someone was on there. I don't know if this person is here, but someone was trading long USD CHF. I'm not sure if it was any of you guys. Let me see here on the chat. Yeah, probably the person's not here anymore. But anyways, so why is this happening? Okay, I've made a very, very nice, let me show you, very, very nice article about CHF CPI, and it's right here. Okay. I'm just going to read for you guys. So CHF Mardi Gras celebrations are devoid of any late indulgence, as its February losses have depended due to an expected downturn in the Swiss CPI data. Credit Agricole long-standing warning about the CHF reduced the start of 2024, coupled with the Swiss National Bank outright stance on forex intervention in December, has manifested in the currency struggles. While a single CPI data point may not trigger an immediate shift to rate cuts by the S&B, CHF could face further losses by end of March. Okay, this is my opinion, right? So the Swiss inflation remaining in the upper range of the S&B's target and domestic interest rates not reaching restrictive levels suggest a cautious outlook. However, my first quarter target forecast is 0.97 for Euro CHF and 0.90 for USD CHF. What happens if I click here? That's cool. I didn't know that. Anyways, so if you look at 0.90 at USD CHF, okay, it's just here. Okay, let me put this 0.90. There we go. Okay, I know it's very close, but it just showed to me how continue to be stronger. And yes, we did have a cut flip on the CHF. I've showed this on Tuesday. Let me just stop share my screen. Just a second. Okie dokie, share screen again. Okay, remember, DXM is 20% long only. Okay, so that's a big take. But if we look at the cut, where's the cut? Here. If you look at the cut, that's pretty interesting. Okay, because we did had a flip to the negative on the CHF, and it's very, most of the time CHF is, it's all the glamour behind it because it's a safe currency, safe haven currency. Most of the money when problem happens around the world, sorry, it's driving to there. And then we have a negative flip. So for this week, most probably we're going to have a very weak CHF, and coupled with the weaker inflation rate, and we just had the CPI, it came as 1% year over year and 0.2% month over month, much lower what the consensus was expecting. Remember, the consensus was expecting 0.6, so that's 0.4 base points out of what they were expecting, and that's not good. Okay, and same for the year over year, that's 0.4 as well of difference in there. Okay, so just to finalize this idea here, there are some global influences as well, and domestic factors contributing to CHF performance in this year of 2024. Inflation is the big one, right? The January Swiss CPI significant cooling to 1.3 year over year raises questions about the Swiss National Bank's central case of higher domestic inflation through the year, because they did maintain a sort of a higher inflation through 2024. They've mentioned about that, and we just started the year with a very, very low figure. Okay, so that's not good. That's not good. It's not happening what they've mentioned about it. Now, if you look for Forex interventions as well, despite initial doubts after the Swiss National Bank December meeting, consecutive increases in Forex reserves in December and January indicated a halt in selling, as we just showed here on the commitments of traders. We did have a flip. if we look at here, I've placed it up the image as well. In purple we have the short, in long, in orange or yellow, whatever, we have the long, if I'm not wrong. Is it orange? It's long, and purple is short. Yeah. And three is and third option, and third reason is the valuation, right? The RAER monthly series of the BIS revealed a sharp 2% increase in December. That's the highest since 2015, and that does impact the CHF standing. Okay. And of course, we will have the challenges with the SNB, the Swiss National Bank. Okay. Right, that's my take on USD CHF as well as Euro CHF. Okay, so Euro CHF, I have a target at, what was the target I've mentioned? 0.97. I can't remember all the numbers. Okay, there we go. Okay, so 0.97. Credit Agricole has a target there as well. Okay, so just bear in mind that's Euro CHF. Okay. What about the Aussie dollar? I've mentioned about the Aussie dollar before, but I can do an analysis on that again. Okay, I do continue to be short on Aussie dollar, more towards bearish in there. Okay, just because we did have this consolidation, it does looks a little bit smaller than what I'm looking to be actually. Feels like more days, because that's too big. That doesn't make any sense here. It does make much more sense now. Okay. Anyways, yeah. So it's just a continuation of a downtrend. Okay, remember I've showed to you guys last week of you know, breaking highs and lows. We had these. Let's not count these as a full break. Let's count this guy here as a break. Okay, because what is basically happening here is we had down, then up, and then down, and now an up move, and probably a down move, and then an up move, and a continuation downtrend. Okay, the big move here on red candle that you guys can see on here was the CPI. Okay, it was influenced by the US dollar CPI. Now, when we look to the Aussie dollar on Australia, what we had today, we had the employment change. Okay, so let's go for the employment change. Oopsie, it's not today here. Okay, we had, there you go. We had the employment change, and we have the full employment change of January as well. And it doesn't look, and we had an employment rate as well, and it just doesn't look any good. Okay, employment rate change was expected to be 26.4 thousand. That's the consensus, and it came as 0.5. So that means that they got 25,900 wrong. Okay, so just that's a really big number, and that's not good for Aussie dollar. Okay, and Australia and US dollar continue to have the strength behind it. Remember, if we look at the US dollar index, we are grinding higher and higher. You know, we of course have pullbacks. It continues to go higher and higher, making higher and higher. Now, if we look to the more, I would say, technical side of things, let's call it like that. We have the commitments of traders. Let's have a look. More long towards the Australian dollar. Okay, that's interesting. It doesn't mean that the market will go up. It just means that they are building some positions. But if we look at the book, the actual book have more short positions than long positions. All right, different from the US dollar, we have more long positions than the short positions. Okay, and that's 56 trades, that's 46 trades. So just remember, Australia right now, there's a one of the things here that made a huge move on Aussie dollar. Okay, I'll show you. We had Aussie Kiwi, I think. Yeah, Aussie Kiwi. So this move here, right, this pretty much this bullish move here, was because reading the RBA, the Reserve Bank of Australia, statement, we can notice that they sort of push back towards when they will cut first. Okay, and now the market is expecting more towards Q3, Q4 of this year, and the market was expecting more towards Q2. So we had a jump on 1 quarter to 2 quarters. That means that rates will be higher for longer. If rates are a lot higher for longer, then the currency will actually be stimulated and will generate more attractivity to all the investors, FDIs, for direct investors around the world. Therefore, it just continued to go up, the Aussie dollar, right? But not with Australia, not with the greenback, not with the US dollar, because US dollar is much stronger than Australian dollar. So in my view, I continue to be a bearish on Aussie dollar and Australian dollar. Okay. Any more questions? No questions? I think I've covered it all, right? I've covered EU dollar, pound dollar, USD, JPY, New Zealand dollar, Aussie dollar, not a problem. Euro JPY. Oh yeah, I got stopped out. Sorry, I didn't got stopped out. I was nearly stopped out. This is the beauty of using ATR. Okay, so always make sure to use ATR. I've teach you guys how to use this already, so please use it. Okay. Where's my Euro Aussie? Let me show you guys that is still holding this position. Well, just a second. Well, there we go. Where is it? Oh, there you go. Okay, so it's here still. So just holding this position, and continue to wait for a downtrend to begin. All right, guys, that's all pretty much from me. Any more questions regarding the markets? No? No questions? Okay, that's good then. Hopefully you guys could learn anything. Always appreciate you guys coming here on Thursday. I know it's a little bit late, but it's an important one as well. Retail sales for UK, right? Oh, US. Wait, we have retail sales for US? We do have retail sales for US. Sheesh, I forgot. Oh, I don't know. Oh gosh. Okay. Well, looking at the scenario right now, we had a stronger NFP, we had a stronger US CPI, we had a stronger PMI, we had a stronger GDP as well. It just feels like that the population does have money, but they don't. Right, that's the thing. They don't have money to spend. They spend in credit. And when I say they spend in credit, is like they go spend and pay the credit and come back with money. But this is not money. This is credit. All right, it genificates your credit score. But of course, in terms of finance, it is money. It may come a little bit more than expected. All right, it may come a little bit more than expected because the consumption over there is still very high. It's nothing going to be crazy, I guess. Nothing going to be crazy, but it can come a little bit higher. Right, that's my take. What's your opinion? Do you guys have any opinion on US retail sales? Nope. All right, guys. So I'm going to finish here. Please, if you have any questions, you can just contact me on the Telegram. More than welcome. Okay, I'm always there answering questions and interacting with you guys. And have a safe trading. All right. Safe trading ahead, you know, during Friday as well. And I see you tomorrow on YouTube and next Tuesday as well. Thanks, guys. Have a good night. See you soon.